Good afternoon. How is everybody? Good. Okay. Y'all gonna have to pick it up a little bit.
If we played some house music, they would.
I'm excited to see everybody. I think I can recognize most of you without your virtual backgrounds and Zoom filters and everything, but excited about this next 20 minutes where we get to talk about busting down doors for next generation of storytellers, creators, entrepreneurs, innovators, and I can't think of a better person to have this conversation with than Melissa Bradley. So let me do a short form bio. Melissa's a serial entrepreneur, founder, investor, mom of 6, worked in the Obama and Clinton administration.
I worked for
Treasury.
2 black presidents, yep.
Exactly. Has been a regulator, mad sneaker game. I need to see this collection. I haven't seen the full collection yet. But you know, in short, just the OG in this space. I think anybody who knows you knows that you have always been passionate about supporting Black and brown entrepreneurs. And the landscape has changed. You've been in this game for a minute, but the landscape has changed. So I figured we would start with where you started. A lot of this passion came from your own experience as an entrepreneur going after capital. So if you could just talk a little bit about that.
Yeah, so first I want to acknowledge everybody in here who is working with Black and brown entrepreneurs. I had a chance to stand in the back of the session that was with Nasir and oh my gosh, and BIA and New Profit. It's been a journey. I think when I started, and let me just say I'm 54. So when I started my first company at 22, I went to the SBA and they told me that I would never be successful because I was Black, because I was a female, and there was no proxy for successful Black women in financial services. I'm old, so it was not fintech, it was financial services. And when I left that room, I said if there was anything that I could ever do so that never happened to somebody who looked like me again, I would. And so I would say, fast forward now, I think what has changed is 3 primary things. One, as you heard from Brandy, there's at least an acknowledgement that there's a problem. And people are willing to have hard conversations. I wish there was a little more progress, but at least we're willing to have the conversations. I think the second thing is, certainly post-COVID and post-George Floyd, the influx of money, over $300 billion went to Black GPs that were ideally to deploy to Black and brown entrepreneurs, and so I think there is a flow of capital that has made it. I'm not sure it was enough. I'm not sure it was appropriately aligned, but at least it was there. And then I think there are companies like Comcast and Citi and others that are willing to step out and say, this is an important group. And I think the final thing aside from that is that people are finally listening to the data. I don't really care what color you are, but it is factually correct that the fastest growing segment in this country is me, not you or you, with no disrespect. And the fastest growing segment of entrepreneurs after a 40-year decline of white men not becoming entrepreneurs are women and people of color, Black women in particular. If you do not like me, that's okay. But if you believe or want to support the capitalist system, it is just darn near dumb that you do not begin to invest in us, because the economic fate of this country, as Citi Report, has already cost us $16 trillion. We don't have another $16 trillion. And so I think it's important that people understand while you can be fearful and uncomfortable, you have to acknowledge the fact that the Black and brown communities are the economic future of this country. You ain't got to like me, but you certainly better respect my value.
Definitely.
I'm sorry, one other thing. And I should say, I'm sorry, but that's not new, right? Most of the financial institutions that exist today were stood up because slaves were the underlying assets. Most of the insurance companies were stood up because slaves were the underlying. So the majority that is now becoming the minority has always understood the wealth and value of the Black community. Now it is our turn to lead the economic revolution.
Yeah, I love that. And you hear a lot today about the moral imperative becoming the economic imperative, right. You know, and I think people are seeing that, and whether it's citing Citi's report, there's a lot of data out there for sure. You know, we've been able to work together at Comcast. You've supported our Comcast Rise program. Proud to say, to date, $60 million deployed in a combination of technology, networking capability, cash grants, and if you're lucky, some help from Ureeka.
Yes.
So Ureeka, you co-founded this network, this ecosystem. Talk a little bit about what Ureeka does.
Yeah, so it was important to me, having been an entrepreneur and then going into this lovely thing we call the nonprofit sector, to figure out.
You love it.
I love it. Just love it. It's always helpful to beg for money for people from people who don't understand the people that I'm trying to use the money for.
Melissa ain't begging nobody. Let me just be clear.
Except for you and Brandy. But I would say that what is the reason for Ureeka is that I recognize the importance of signal effect. And if you listen to people like Kelly and others, right, the reality is that most of us are doing this work as nonprofits, which means that we're automatically perceived to be below value, and there's a subsidized approach. It was important to me to at least raise some money from venture capital to see that if we could signal there is actually economic value and return in investing in entrepreneurs of color. We're close. We're cash flow positive. We're not yet profitable. And that was really the important part. But it was also to recognize that while even myself running my little nonprofit organization, the amount of people that are entering a space, we just can't do it alone. And so it takes an ecosystem approach. And so being a big fan of the platform economy, it made sense to be able to do that. And with your support and the partnership of others, we've deployed over $200 million since George Floyd to entrepreneurs of color, which has been great.
So as you mentioned, with the pandemic, this global racial reckoning, there's certainly a new conversation being had about supporting this. But one of the things I've always appreciated about you, and hopefully we appreciate about each other, is just your honesty about this space. I mean, many corporations are entering the space for the first time. Yep. There's new money on the table. What are some of the behaviors you're seeing that you're excited about, and what are some of the behaviors that you're seeing that you don't want to see again?
So I think that there's two big behaviors. I'm going to try to leave names out of it if I can, but people are going to know. The biggest mistake is one of the largest venture capital firms, post George Floyd, says they're going to create a fund to help black entrepreneurs, and they put $2 million in. Come on, people. There's more than 2 million of us. So that was a big mistake of really not understanding.
They were just trying to match the 2 million that was.
I would leave that alone. But I think the big mistake was that people didn't understand the real market opportunity, right? I think what's exciting is that people are moving away from recognizing it's not just philanthropy that's going to solve this problem, that there are companies who are willing to put dollars through venture funds, who are willing to put dollars in the hands of supplier diversity programs. The narrative is not going to change for black and brown communities if we keep getting handouts, because that's not what we need. I never asked for a handout. I asked for equal opportunity to access to capital, which is challenging when I have a 65% greater likelihood to be turned down for a loan, although I have a better credit score than a white peer. It's hard for me to do that when it costs $250,000 more for me to start the same exact business as my white peer, and nobody understands that. And what's crazy is that black entrepreneurs, in particular black women, last 8.7 years at minimum, while 50% of most businesses fail within 5 years. So I think the opportunity is people are beginning to see we don't need a subsidy. We need an investment. And if you invest in us, if I use 1863 as a proxy, we've created over $300 million of new wealth within the past 2 years and over 2,000 jobs with a 97.5% survival rate post-COVID. If you give us a chance, we got this because we're capital efficient. We are resilient as an MF. I'm sorry, I realize I don't want to embarrass Comcast. And we know how to add and subtract, which is what more than some people in Silicon Valley can do.
Which actually, brings me to one of the tenets of your model, which is you don't focus on the pitch, right?
No.
You're focusing on sort of core operational skill sets to run businesses. And I think that's important, and the numbers are crazy, but talk about the success rates of your Ureeka community, and you haven't had the business failures that we've seen in the broader market.
Yeah, I think one is that we understand entrepreneurship is a team sport. And so we are mindful and laser focused on job creation, right? The reality is that as a solo entrepreneur, if you're lucky, your average is $37,000 ARR. As soon as you hire one employee, it goes up to $385,000 ARR. So we are laser focused on creating wealth and creating jobs, which, let's be clear, does not manifest because you gave a great 3-minute pitch and Mr. Wonderful turned you down. Right. And so we are laser focused.
We all have seen those
We have
pitches.
seen that, particularly if people look like me. And so I think what's important is that we're focusing on how do we go from founder to CEO. Let's let's be honest, anybody can start a business, but not anybody can grow a business. And we need to be brutally honest about that.
Yeah.
And that is because pitching is not a fundamental part of how do you grow a business. Being able to do your financials, 2 + 2 is always 4, 3 × 3 is always 9. People tell me they're afraid of numbers. I'm like, what are you afraid of? It is nothing more than a numerical expression of your values. And we have to stop allowing this other stuff that mostly non-black and brown investors have put into our head that we are not valuable. And so we're laser focused on how do you hire, how do you fire? How do you manage your books? How do you create processes and systems? How do you keep your money? When do you fundraise? What type of fundraising? How do you market? How do you have robust top of funnel? And not pitching, because the reality is, if anybody's an entrepreneur, you may pitch 4 or 5 times in your life. The rest of the time, you should be running your damn business.
Right, right. And so let's talk about 1863 Ventures and how you think about which entrepreneurs you're going to invest in. Let us hear about what the new majority entrepreneur is, and you've also been a big supporter of if the current system is not working, you sort of have to change the game. So 1, are we using the full set of financial tools and alternatives available to us? But 2, we just have to think about this differently.
Absolutely.
Because we're talking about, right, net worth that was never there to begin with.
Yep.
And you're not going to make up for that overnight. But just let us hear a little bit about your philosophy on that specific entrepreneur.
Sure. So we are intentionally 1863 because we want to signal that this is our chance to reclaim the economic value that we gave to everybody else and was stolen from us over 400 years ago. We also are mindful that our job and my goal is to create $100 billion of new wealth by 2030. And so we can only do that by helping businesses grow and helping them create jobs, which does not mean going to raise a whole bunch of money. And so our philosophy from the investment side is very simple. Invest in entrepreneurs who are laser focused on growth, who have a deep and passionate commitment to the community, and who actually understand how to run a business within the sector that they are in. CPG is not the same as fintech, which is not the same as supplier diversity, and not the same as business services. And so we're very clear it is not a one-size-fits-all model. We are also mindful that it's hard to get a check. I mean, I had to have a white co-founder to get my first check. And so we write checks. We write first checks. We give $150,000 to $250,000, and we let the entrepreneur decide what it is. We let them decide if it's a revenue-based financing model, so they don't have to give up equity. We let them decide if they want it to be equity.
Talk about the revenue-based financing for a minute, because I'm not sure everybody understands that.
Yeah. So one of the fundamental frustrations I have is that even though all this money is flowing to the Black community through venture capital, all it means is that y'all continue to profit off my labor.
Right.
Because by the time I go exit, I'm lucky if I get 20% of the cap table. So we're mindful that the revenue-based financing, I give you a loan, I set a term, I set an interest rate, and instead of paying me back fixed payments over the course of the year or years, which is hard for a business that doesn't necessarily have access to markets and erratic cash flow, you pay me back a fixed percentage of whatever you earn that month. And if you don't earn anything that month, then you don't pay me that month. And our terms are 5 years, and right now, after 2.5 years, we have a 100% repayment rate. And some of our folks have already paid back their loan prematurely. And what's interesting is we thought that we would do equity for tech companies and debt for non-tech companies. And what we're realizing is my folks are catching on. I got some venture capital for tech. I'm not trying to give my wealth to a bunch of guys in Silicon Valley. Let me go get revenue-based financing to allow myself to grow. And so I think it's important that we step outside the box and think we have to be like this person or that person, but we need to have more mission-aligned financial vehicles that entrepreneurs get to choose as opposed to me getting to choose, because unlike me and a few others, most of these investors, they never run a business. They wouldn't know, they couldn't survive if they had to live and feed their family off of equity.
And it's a great lesson for founders, too, because everybody chases VC money, and VC money isn't for everybody.
No, and it's not cheap.
No.
And it's not kind.
No, you were paying for that.
No.
Dearly, dearly. And I think that's important about your model, because ultimately your goal is wealth creation in the Black community, period. So it's not just the one entrepreneur. So tell us about when you're having a tough conversation with an entrepreneur, somebody that's just not ready. How does that go?
You not ready?
But have you heard my pitch, though?
You not ready. You never. And what I say is, it's tight and you look fierce, but you ain't ready. Tiffany Haddish says she ready. I say you ain't ready. And so, I mean, but I think we have to be honest. And the reason that's really important to me, and I will say that many years ago, we took a group of 50 Black entrepreneurs to Silicon Valley, and they met with a bunch of investors, and some of them were great, and some of them just straight up sucked. And they didn't say anything. And when I went to dinner, I was like, I never thought I would say this, but could y'all stop being so damn politically correct and tell them that they sucked? Because we have brothers and sisters out here who are just sick and tired of corporate America, who've leveraged their homes, who've emptied out their retirement accounts, and probably are never going to make it. Not because they're bad, but the markets are just not ready for them, or there's just not enough people who are willing to invest in them. And I would hate to see the opportunity cost and lost wealth in our community because we can't afford it because somebody wasn't on say, this is not the right time. It's not you, it's the market. Target is doing great, but how many more black hair care brands is Target going to put on the shelf? Can you go make something else? And so I do think that we have to be brutally honest with people.
Yeah.
It's true. We have to be brutally honest. And I will say that in my household, because we do have 6 kids, we have this thing, everybody needs a pillow and a mirror. I'm the mirror, my wife's the pillow. So everybody needs somebody that you can go to, cry on, talk to, and they'll tell you everything is okay. And everybody needs to say, that is just the dumbest shit I've ever heard. Could you go do something else? And it just helps you stay balanced. And so I think it's important, though, that we are honest because there is a huge opportunity cost if you don't get this right. Because let's be honest, the market's not in our favor. And so if you want to gamble, I'd rather you go to Vegas than gamble with the wealth that you have accumulated for you and your family.
But it's important, though, because when you're from an underrepresented community, people are less likely to be honest with you.
That's true.
And that's whether you're a nonprofit seeking grant funding or an entrepreneur seeking funding. One of the other things you always talk about is how many black and brown founders don't ask for
it's
enough.
so frustrating. So the other piece is that for those who did do well when they went to Silicon Valley, I saw some of them and I said, well, what did you get? And I said, what'd you ask for? And they said, well, I got what I asked for. That's awesome. I said, what'd you ask for? And they all asked for like less than $100,000. Who's an entrepreneur in here? You can't even run a successful marketing campaign less than $100,000. And so what my research has found is that we tend to ask what we think we can get and not what we deserve. And I want us to get what we damn deserve, not just for now, but for the past 400 years that y'all done jacked us over.
Assuming you are ready.
You ready, you gotta be ready, gotta be ready. But I do think, I'm not even going to say the saying because I always mess it up, but I do think that part of that, though, is part of the systemic racism and the anti-blackness that we're experiencing, which is we do not understand their value. And so at the age of 54, as I'm trying to retire really soon, if the only thing I can make sure that folks who look like me know is we have been ready. What are we waiting for?
Yeah, I love that. Because I think, what is it, the average size loan for a black business, $5,000. $5,000.
That's right.
And most of that is being afraid to ask for the right amount or not believing you can get more. But it's also just understanding, the entire game around capital.
And it is a game.
Absolutely.
It is a game.
Absolutely. We have many founders in the room, many people who obviously operate at that intersection of business, social impact. Just given all your experience, dealing with this type of community, what are some key points you don't want us to forget when we leave this room that you find it's that lesson people keep having to remember when you've said it many times? Yeah,
so it's like my kids. So I think what I would say to ecosystem builders,
kids.
I know, right? Irrespective of your race or gender, is that, entrepreneurship is about investing in what is growing. And so it just seems counterintuitive that you would not invest in black and brown communities. And so I say that to ecosystem builders, to funders, and to investors.
Full stop.
Full stop, period. Like y'all should be fired. Like, it's your fiduciary duty to invest in what is growing. I just don't understand why you don't see me as a valuable asset. Like, you should just be fired, straight up. The second thing is, so don't let me be on your board because y'all be fired. The other piece that I would say to ecosystem builders, and particularly, is, hang in there, because I truly do believe our time has come. It is unfortunate that it took the death of a black man publicly on television, unfortunately is still happening, to really shake people up and say, oh, wow, that's actually happening. And I think if we pair this moral imperative of if you had any angst, disgust, horror, or fear, and pair that with the fact that we are the fastest growing, that we have historically been the underpinning of this country, that we are capital efficient, that we have greater risk tolerance. Respectfully, we have a longer lineage and history and legacy in the world of entrepreneurship, which is why y'all burned down Tulsa, Oklahoma, that this is a chance for the country to redeem itself. That if you really say you can, because I'm not American, I was born here, I own it, I'm from New York, but I find it ironic that we really say we're in this capitalist system and we don't follow the rules of investing in that which is successful and profitable.
Yeah.
And so Brandy said it, but there's a great economist who said, investing in what is profitable is uncomfortable. And so I'll echo what Brandy said, it's time for y'all to get friggin' uncomfortable.
Absolutely. Well, Melissa, I just want to thank you for your time. Always dropping good gems for everybody. And I may not call you if I need to cry about something.
No, you shouldn't. You should. You should.
You might be my second call.
All right, I
but
got you.
Maybe not
But if
my
you're ready,
first.
I got you. If you're ready, I got you.
Melissa Bradley.
Thank you, man.